Good morning. It is March 14th, 2023. I'm Eric Stepanek. I'm here with Damian White today, and this is a Gold Spot special alert. In 2008, we saw a bank by the name of Lehman Brothers go underneath, and it created a span of multiple years of chaos for our overall economic system. Last week, we saw something very similar for different reasons, but two of the biggest bank failures in American history. Damian White has got his finger on the pulse, and he's going to explain to us what is going on and why this means something to us. Damian?
Yeah, absolutely. Well, it is definitely something that's very important right now. I mean, the entire United States banking system is under a lot of stress right now. What happened with Silicon Valley Bank is it was the 16th largest bank in the United States, based in Silicon Valley, does a lot of funding for a majority of the tech startups and other Silicon Valley companies there. So it was a commercial bank, had a lot of business accounts there, no real personal money. However, what happened was they had large influx of cash starting from obviously all these tech businesses, but then going into the pandemic, there was just an enormous amount of cash. Well, last year in 2022, these startup companies started burning a lot more cash than normal because regular funding had dried up for them, causing massive deposits to come out of this bank at an unprecedented rate. Meanwhile, the asset managers at the bank had placed everything into long duration bonds with depositors short duration cash. So when the depositors started needing this cash and no more deposits were coming into the bank, what ended up happening is they had no more money. So they had to sell these bonds that they had bought at the very bottom of the market or the top of the market, whichever way you say. They basically leveraged their entire portfolio on a 40-year bond market bubble at the top. And then the feds aggressively raised rates. That bank failed. They had no money. The government took conservatorship of it, receivership of it on Friday morning before it even opened. However, this systemic problem now is happening everywhere because everybody has these bonds. So there's massive bond losses on everybody's balance sheet, and it's starting to spread. So the main problem is that this bank wasn't the first bank to fail. There was another bank, actually Silvergate, that failed about a week before this one, and then on the weekend, on Sunday, Signature Bank was taken over before the market opened on Monday. So at that point, there were even three more banks that were in trouble that they were considered possible to fail. However, as of last night, that number has gone up to about 20 banks right now on the list that's possible to fail. So we're getting into a situation where the contagion is spreading very rapidly. And the biggest problem I think that I see is that this contagion is spreading to not just them, but the biggest holder of bonds on the planet is the Federal Reserve. So right now the Federal Reserve has the same balance sheet problem, and they're sitting on about 1.3, I believe, trillion dollars in unrealized losses. So you can see what happened in one little tiny bank. I think this contagion could be a big problem, and it doesn't happen overnight. It spreads, but we're seeing it spread very rapidly.
Joe Biden woke up from one of his naps, and he came out and told us that, hey, don't worry, we're going to take care of all of this. But the problem I see is this. The only way that you're going to be able to save all of these banks, as we did back in the 2008 crisis, is we just print money, print money, print money, print money. But the reason why we're raising rates is because we're trying to slow down inflation because of all the money we're printing. Do you see that becoming kind of getting between a rock and a hard place for the Fed?
Absolutely. You can say any cliche you want. I mean, they are stuck. They've painted themselves into a corner. They have to raise rates to contain inflation and suppress it. However, it's causing a systemic bank failure around the planet. I mean, this thing it's spread to Dubai. There's in China. There's venture capital. I mean, so it keeps going. And you know what it's really doing is putting a lot of pressure, and it's causing a lack of confidence. So the lack of confidence is the problem. There are people lined up all over regional banks to withdraw their money, and when you have that kind of fear, there's nothing to do to really stop it. So it's feeding on itself. And when you say save all the depositors, that's a big problem because the FDIC has $125 billion in reserve funds. The amount of deposits in the United States is $10 trillion. Those numbers don't match. So you're either going to have to, they're trying to save confidence right now because you can't really save the monetary system like that.
September is when Lehman Brothers, in 2008, is when Lehman Brothers actually collapsed. The gold prices temporarily spiked for a few weeks, but then they actually retracted. And for the rest of that year, gold prices really didn't take off. It was the following years, 2009, 2010, 2011. That's where we saw gold prices really make the move, and sometimes in substantial levels. But it was periodic times within those years that we saw it go from somewhere around $800 all the way up to almost $2,000 per ounce. Something to keep in mind as we're going down this, because I think, Damien, you could agree with me that this is not something that's going to be a few weeks. This is something that can be years of problems.
Well, I mean, you look at some of these other ones that have taken, like you said, that original one in '08 lasted. That was just 3 years. The housing market started at 2 years before that. We have similar dynamics now, so I wouldn't expect any resolution out of this, even if we get one for a handful of years till the financial markets can get their footing. So people are pulling cash out, and what are they doing with that? They're buying hard assets. They're buying gold. I saw it all day yesterday. It was crazy.
Absolutely. So we are here for you. If you have more questions, and I'm sure you do, give us a call, talk to your advisor. If you don't have one already set up, ask to talk to one of them, and we'd be happy to set you up. You can ask for, Damien by name if you want to, but we're more than happy to chat with you guys about all the things that are going on right now. Have a great day, and we're going to see you at the end of the week on our wrap up. Here we go.